Hello everybody, this is AK. I'm back. So today is another happy day. DBS share price broke $35 a share. Ooh, wow. Yeah, what all right. This is despite the bonus 1 for 10 issue and also the much higher dividend per share. Some were thinking that share price might fall back to $30 or $32 or something like that, but of course that didn't happen. Um, as we feel very happy and euphoric, as we should, please don't let all this sweep us away, okay? Because when there's a lot of optimism and the FOMO feeling is strong, you see many people, right, who have missed the boat start dumping in chunks of money into the stock and push it higher, right? This means that stock price could go higher, but of course the downside risk is a bit stronger now. Okay, so like I've said before, for those people who have missed the boat and then they feel like they must get in, nibble, don't gobble, right? I say the stock market will always be there. The stock prices don't go up in the straight line. It climbs a wall of worry. So there will be times when it comes back down. So we want to be ready when that happens, right? Anyway, reason for all this jubilation for DBS is because in its latest results, first quarter 2024 results, they said profit went up 15% from a year ago, and it has hit a record of $2.96 billion. And the ROE, which I said is the reason why I was thinking of adding to my investment in DBS, because the ROE has always been very spectacular compared to OCBC and UOB. The ROE actually reached 19.4%. It's absolutely stunning, right? And total income grew, and the net interest margin was stable at 2.14%. Fee income also increased, and it crossed $1 billion for the first time. So I said before, even if interest rates were to come down, don't worry. That's not net interest income isn't the bank's only source of income, right? So we say fee income crossed $1 billion for the first time, and treasury customer sales reached a record, right? And the cost to income ratio is very good, 37%. And this is all thanks to the fact that DBS had a drive to go digital many, many years ago, and it has helped to lower the cost. And the NPL, non-performing loan ratio, is very low at 1.1%. Asset quality is very stable. And let's see, what else did they say? Well, basically everything's good. Even expenses declined 6%, right? And commercial book net interest income was stable from the previous quarter. And if we look at the other sources of income, apart net commercial book net fee income, right? So commercial net fee income rose 20% to a record of 1.05 billion Singapore dollars. Wealth management fees grew 45% to $536 million, right? So don't worry about interest rates falling, and even if it falls, it's not going to fall too much this year or even next year, right? Because inflation, like I said in previous video, is still sticky in the US, so the Fed is in no hurry to cut interest rates, which was confirmed during their last meeting, right? The last Fed meeting, they're holding interest rates steady, right? So loan-related fees increased 30% to 185 million Singapore dollars, and transaction fees rose 6% to $231 million. Everything is good and rosy. Everything's good and rosy, right? And then I talk about CET1 ratio for OCBC the last time being 15.1%, and how UOB CET1 ratio was lower than 14%. What about DBS? Your DBS is 14.7%. It's also very high, and this one reason why Mr. Piyush Gupta decided to do the higher dividend payout and increasing dividend per share and the bonus share, just to return capital to shareholders at a faster pace, because it seems to have a lot of excess capital as well. And let's hope OCBC learns from this, and maybe they'll do something similar, right? And Piyush Gupta say they have the record earnings have given them DBS a strong start to the year, and they think they are well positioned to capture more business opportunities, and they are optimistic that total income and earnings will be better than previously guided. So more positive surprises coming. That's what he's saying, right? And they'll be able to deliver another year of strong shareholder returns, right? So DBS is now still trading at quite a low PE, 9 times, but for banks, I think that's for Singapore banks, that seems quite normal. But I think 9 times PE ratio is fair, and dividend yield is at 6.2% and is trading at 1.4 times book, right? And I think what's not to like, right? And I've been saying for some time that I want to increase my investment in DBS, OCBC, and UOB, so that together they form at least 40% of my investment portfolio. But and it has been quite a while since I look at how much my investments are worth, and I took a quick look. Well, apparently the 3 banks together now account for more than 40% of my investment portfolio, simply because their share prices have gone up quite a bit, right, since the last time I looked. So I think this is a happy situation, because in a recent video I said that I would probably be just buying more T-bills and do nothing else until the next stock market crash. So without me having to do anything, my investment in the 3 local banks has already exceeded 40% of my portfolio's market value. Quite happy, can't complain, right? Things could be worse. So that's all for this video. I probably will not have new videos for a few days. As I take a break, I'll be back next week. Okay, so until then, if AK can do it, so can you. Bye bye.